Today, we're diving into The Unlikely Investor by Grant Franke, a must-read for anyone who feels like they're not cut out for the world of investing. This book proves that you don't need a degree in finance or years of experience to be a successful investor. Through each chapter, Franke walks us through the mindset, strategies, and habits that can turn even the most unlikely person into a confident, successful investor. Stick around, because I'm going to show you how you can apply these lessons in your life starting today. And of course, if you want to dive deeper, the link to the full book is in the description below. This is Wealthlocity. Here you create, protect, and grow your wealth fast. The first chapter tackles one of the biggest misconceptions, that successful investors are born with a special talent or innate understanding of markets. Franke argues that this simply isn't true. Successful investing is about education, discipline, and following a process, not raw talent. The idea that some people are naturals at investing is a myth. In reality, anyone can learn to invest effectively, no matter their background. The qualities that matter most are discipline, a willingness to learn, and patience. Start building your investment knowledge today, one small step at a time. If you're new to investing, find beginner-friendly resources like podcasts, YouTube channels, or books to get the ball rolling. Dedicate at least 15 minutes a day to learning about how investing works, whether it's understanding the stock market, different types of assets, or key investing terms like diversification or index funds. As you build your knowledge, you'll feel more confident about taking the first steps into investing. Next, Franke emphasizes that mindset is half the battle. Many would-be investors get discouraged by short-term losses or the constant bombardment of market news. Franke teaches that a long-term mindset is critical to avoiding emotional decision-making. Investing is as much about managing your emotions as it is about picking the right assets. A long-term mindset helps you stay calm during market dips and resist the urge to panic sell when things look uncertain. Develop a habit of practicing emotional discipline. Before making any financial decisions, especially during market volatility, take a moment to ask yourself if you're reacting emotionally or following your long-term plan. A good way to practice this is by checking your portfolio less frequently. Set up alerts for major events, but resist the urge to look at it every day. You can also write down your investment goals and check in periodically to remind yourself of the bigger picture. Franke dedicates an entire chapter to what Albert Einstein famously called the eighth wonder of the world, compound interest. He shows, with clear examples, how even small, consistent investments can snowball over time into significant wealth. The magic of compound interest lies in consistency and time. The longer you leave your money invested, the more it grows, not just from your contributions, but from the returns on your returns. Start contributing to an investment account today, even if it's just a small amount. If you're in your 20s or 30s, you have time on your side, and even modest contributions can grow significantly by the time you retire. You can begin by opening a brokerage account, or if you're more conservative, a tax-advantaged retirement account like an IRA or 401 or K. Setting up automatic contributions is key to leveraging compound interest consistently. Chapter 4. Understanding Risk and Reward. Here, Franke explains the trade-off between risk and reward. High-reward investments typically carry higher risks, while safer investments tend to offer lower returns. He also introduces the idea of diversification, showing how spreading your investments can reduce overall risk. Risk is a natural part of investing, but understanding and managing it is crucial to long-term success. The key to managing risk isn't to avoid it, but to spread it across different types of investments. Take stock of your risk tolerance today. If you're young and have time on your side, you may want to allocate more of your portfolio to stocks, which historically offer higher returns but come with more volatility. If you're nearing retirement or prefer stability, consider balancing with bonds or index funds. Either way, start diversifying your investments by researching different asset classes and adding them to your portfolio to balance out risk. Chapter 5. The Importance of Patience. Franke emphasizes that patience is one of the most underrated qualities in investing. Investors often sabotage their own success by being impatient, selling off assets at the first sign of trouble, or chasing after the latest hot stock. Patience pays off. Short-term market fluctuations are inevitable, but long-term trends are what matter. Jumping in and out of the market often leads to poor returns. When you invest, think of it as planting a tree. It takes years to grow and bear fruit. Start developing the discipline to hold your investments through both the ups and downs. One way to do this is by setting a rule for yourself. Don't touch your investments for at least 5 years. Use automated tools to make regular contributions and then step back. Trust the process and give it time. Franca devotes this chapter to addressing the fear that holds many people back from investing, the fear of losing money. He reassures readers that while losses can happen in the short term, history shows that markets recover and grow over the long term. The fear of loss is natural, but it shouldn't stop you from investing. The biggest mistake is to sit on the sidelines and miss out on the potential growth that investing offers. Work on reframing how you think about risk. Instead of seeing market dips as losses, view them as buying opportunities. If the market drops, the stocks you believe in are on sale. Commit to staying invested, even when things look shaky. You can also limit the impact of fear by not checking your portfolio every day. Instead, set aside specific times each quarter to review and adjust your investments. In this chapter, Franca explains how automation can simplify investing and ensure consistency. Automated systems like robo-advisors or automatic contributions can help you stay on track without needing to actively manage your portfolio every day. Automation is your best friend when it comes to investing. It eliminates emotional decision-making and ensures that you stay on course with regular, consistent contributions to your portfolio. If you haven't already, sign up for an automated investing service or set up automatic transfers to your investment accounts. Many brokerages offer robo-advisors that build and manage portfolios based on your risk tolerance. Alternatively, set up automatic monthly contributions to your investment accounts so you don't have to worry about forgetting or second-guessing yourself. Automation allows you to set it and forget it, ensuring you stay consistent without the stress. The final chapter serves as a reminder of the importance of sticking to your investment strategy, even when it seems like the market is against you. Franca provides real-life examples of investors who stayed committed to their plans and ultimately came out ahead. Consistency and resilience are what separate successful investors from those who give up too soon. Markets will rise and fall, but long-term success belongs to those who stay the course. Review your investment plan today. If you don't have one, create one that outlines your goals, time horizon, and risk tolerance. Then, commit to sticking with it, whether the market is up or down. Keep your focus on your long-term goals, like retirement or saving for a major life event, and avoid getting distracted by short-term volatility. If you need extra help, find an accountability partner or financial advisor to keep you on track. That wraps up The Unlikely Investor by Grant Franca. This book is packed with practical advice for anyone who feels like they don't fit the mold of a typical investor. The key takeaway? Investing is a skill anyone can learn, and success comes from building the right mindset, staying patient, and sticking to a long-term plan. If you're ready to dive deeper into the book, check out the link in the description below. If you enjoyed this video, hit the like button, subscribe for more, and leave a comment letting me know which chapter resonated with you the most. Thanks for watching, and I'll see you in the next one with more money in your pocket.